Good morning, everybody. It's Wall Street Beats with Robert Marson, Kevin Bakes Baker. I'm David Maris. It is August 24th. I think somebody's given a speech today. So we'll hear about that later in the day. I'm sure there's some sort of macro stuff going on. I hear we have no deal with Iran, except we are going to. It's a financial Armageddon D-Day for them, with the worst sanctions ever. So we'll see how that works out. But let's see what Robert and Kevin have for us today. I have a little bit of healthcare, and so Robert, why don't we kick off with you? You wanted to talk about Elvira. What is that? ELVA.
ELVA, close enough.
I want to thank the Oak Ridge boys for coming.
So it was just sort of cleaning up the earnings release season. I don't think I got to Elvo last week. They're a lithium-ion battery technology with some proprietary battery that makes their life cycle 3 or 4 times the normal one, and also prevents fires, which in the lithium-ion battery business is a not insignificant benefit. So they 2 years ago they grew from 40 million to 60 million. This year was supposed to be from 60 million to 80 million, while they were pursuing a major deal with Amazon, because Amazon is their biggest customer. They use their batteries in forklifts and robotic material handling equipment inside their distribution centers. And Amazon had asked them to develop a data center battery because they like the IP so much. So what happened this year was they made their first 2 quarters. They didn't show a lot of purchase orders, which had me concerned, and I just trimmed a little bit of stock. We're in it here on this site between 2 and 4. The stock got as high as 12 on the Amazon announcement, which was a week or so before the earnings release. But when they released the numbers, they pooped the bed in a major way. So the 83 million became 73 million, and that was only for 6 months of missing. So that's a pretty big miss. And the Amazon deal was a little bit on the underwhelming side. They gave Amazon warrants to buy equity upon cumulative sales, but no minimum sales commitments, and they didn't change the terms of their business workings under the new structure. So the existing commercial relationship was the same. So the bear case is Amazon just fleeced them for some equity. The bull case from the company's perspective, and Amazon is one of the most sophisticated technology users and developers and buyers in the world. So, this is a company that's not even $100 million in revenue, and they have a deal, with their largest customer, Amazon. So, if the company can get Amazon to double or triple its revenues in a couple of years, which is what they think it's going to lead to, then this will be a home run deal, and the company will grow, hyper growth period. It'll be my version of Bloom Energy, 50, 60, 70% revenue growth over 2 or 3 years. They're building a factory in the US for these data center batteries, fully vertically integrated, qualifies for some tax credit, 4080, I think it's called, gives the buyers of the batteries a 38% tax credit against the purchase price. So it reduces the battery price by almost 40% to the purchaser. A $30 million battery becomes, an $18 million battery to a buyer. And in a data center, that's where you use a lot of them. That's a big deal. So they mentioned they have, multiple negotiations with multiple data center developers, any which of whom could take the entire factory's output in 1 year. So there's this great potential story with excellent IP. However, management kind of dropped the ball on delivering the numbers while they were putting all the strategic plans in place. And the Amazon deal slipped by 4 or 5 months. They had hoped to get revenue from it in the second half of this year. But since it slipped, Amazon gets warrants on placing orders. They suddenly slowed down orders for the last 6 months, and there was no orders, so we expect the orders to come because they were saving them to get equity for them, but we don't know. And the material reduction of $10 million for 2 quarters, was on a $20 million a quarter run rate. It was supposed to be 20 million and 23 and 28, and they're doing 18 and 19 or 18 and 20. That's a very, very big miss. This is the second big miss in 2 years. The first miss, the stock went from 4 to 2. This miss, the stock's gone from 10 to 6, and it's still not cheap at 6 with where the numbers are. So this is a battle I face. A+ IP, phenomenal batteries. They ship batteries to Japan, which invented the lithium-ion battery. No North American company does that. It's recognized as one of the best products out there, and I love the IP. It should sell itself, which it has to, since they don't have a sales force. They basically white label their products, which is another flaw in their business model. But the CEO and the management team, I give a C- grade. The CEO is the CEO because of his last name. His dad founded the company. Okay, He's a bright guy, but he's not an experienced business person. And they have a lot of work ahead of them to scale this factory they have in Jamestown, New York, and to get it ramped up and to sell a few of these batteries. It only takes four data center batteries to fill this plant for 130 million in revenue. And again, as I said, they're going to do 73 million in revenue this year, and the plant should be up and producing batteries next year. So it's very easy to see the business doubling or tripling in a couple of years once this plant comes online. And it is a strategic gem in the U.S. for this kind of production. So it could be, it could be a home run. It's the balance sheet's not terribly at risk, so I don't think it's a big issue here. But it's a very large disappointment to have management cut you off at the knees 2 out of 3 years on the June quarter announcement, saying, yeah, the June quarter missed big and the September quarter is going to miss big, and our fiscal year, which is September, is going to be way worse than we thought. So I'm holding my position because it's kind of down so much. I don't want to sell it. And if it dropped another $1 or $2, I'd be a buyer. And any kind of news on them getting big orders from Amazon would drive the stock up materially. And that's what the bulls are hoping for in the short run, the next couple of months. So they said, we believe Amazon's going to dramatically accelerate their purchases this year for their material, their forklift batteries. And then next year, they're going to take delivery of a data center battery. So that's
all right. So you're staying put for now.
Staying put. But
you haven't doubled up or tripled up or
no.
You placed your bet.
Oh, the last time when it was 2, I said I'm standing on my head and spitting nickels, and it went to 13, which I used one other time with Arteris at 2 and at 3 and change, and it went to 50 in the last year. I used that phrase on 2 longs. So I'm not using it again because the fundamentals are not all, the ducks are not all lined in a row right now. So it's a frustrating, it's still a nicely profitable trade after being a very profitable trade. But I have to admit, my patience is being tried after the second big miss in 3 years. So the other name is PayPal. And PayPal is a stock that I talked about before in the 40s, bought it. They announced the deal. Someone announced a hostile deal at 60. It went up to 55. I bought more because I thought, well, 60 is no one would make their best and final bid out of the chute. So if they're bidding 60 and they pay 70, we feel great because we got a lot more than 60. But 70 is still a shitty price for PayPal, making over $5 in earnings. And the one thing according to the Wall Street Journal last week, they rejected the first bid without qualifications. The second bid, they're discussing right now. The Wall Street Journal, they're in negotiations. It's the bid higher, And I also hope they're shopping the company to other people because, as Charlie, PBD, and I have talked in the past, we believe PayPal belongs inside JPMorgan. Jamie Dimon has said they want to build their payments business up. We believe PayPal is still a very good franchise. People use it as a verb sometimes. And we think that they just fell behind on technology. They lost their way. They got fat, dumb, and happy since they had a near monopoly for many years. And they let people encroach. But I think the technology is very fixable, especially with AI and the ability to write code and to produce technology at an accelerated pace. And I also think that, if JP Morgan does get involved, it can get an old-fashioned bidding war auction. And, the ultimate price, a good price for shareholders with a 550 earnings estimate should be at least 80, in my opinion. Now, will it end up at 80? I have my fingers crossed. If no other bidder comes, 60 probably becomes 68. If another bidder emerges, which I hope is one of the best technology banking companies in the world, JP Morgan, then I think we can get closer to an 8 handle. So there's been no news for a couple of weeks, except about 9 days ago, there was a story that they were at the table, the original bidder and management were at the table discussing a new and higher price for the company. So that's
and that's normal, right? I mean, that's usually what happens when a bid isn't accepted immediately and then another bid comes in. You can't, as a board, you can't just say yes or no. You can't reject it out of hand.
Right.
You have to meet. You have to show that you've done due diligence. So you have to get another bank to give a fairness opinion that says, hey, this is okay, but not great. We think we should go see other people.
Right.
And if you had no future, like if you're a company that deep down, look, the next couple of quarters are going to be pretty bad, you would probably hit the bid. And so it's a really good sign that they didn't accept right away.
Right.
And so I've seen people walk away, and what happens then is lots of shareholder lawsuits because you say, well, wait a second, you say things are better. You need to give me guidance. Give me an earnings number 2 years from now that's so high that I will think, okay, walking away from a $70 number is okay.
Right.
And so usually it's a win-win, although all the ARBs will dump it that day. But I think that's a good setup. So I don't know, Kevin, what do you think?
I think that the fairness opinion usually, they make the spreadsheet sweat, and they come up with a price that's 10, 12, 15% above the 52-week high, which is 93. And, I think now maybe that's too much of a stretch from 62 and where the stock was. But I think that, there's a lot of people anchored at that price, and I think it gets close to there at some point. So I'm surprised it's been this slow. Maybe it's because it's the summer. Everybody's in the Hamptons. But I think the 52-week high is where it ought to end up eventually.
Wait, bankers in the Hamptons? Never.
I know.
That's
I apologize for any stereotypes.
Yeah, exactly.
No investment bankers were harmed in the making of this show.
All right, so that actually seems like such a great setup. But let's see. Kevin, what did you have for us today?
I had,
I know over the weekend you mentioned that the Bitcoin wasn't such a great.
I'm wrong.
But
I mean, this is, and I'm going to try and make lemonade out of lemons to a certain extent. But when it closed below the 200 day, I sold a third, and I didn't think about it. I didn't, call anybody or ask an analyst. I just sold a third at down 9%. And clearly, when that happens, especially after a recent purchase, I'm saying, okay, I'm wrong here. And then when it hit down 15 around here or so, down 15, I just sold it. I came in one night, saw it down 15, sold the rest of it. So with slippage, I'm probably down 15% on the position. But I missed, this cascade down here and these gaps down while Bitcoin goes higher. And the what I'm hearing now from the podcast community is Bitcoin doesn't need any stinking narratives. Governments are dumb. They will print money. They will intervene at the long end of the yield curve with billions and trillions of dollars. And this is our hedge against fiat currencies, and that's what they reverted to. Even though it is not acted like that when in prior money printing instances, that's the game they're playing now. Obviously, there were some shorts that were squeezed. I mean, you can see that here. But life's too short. I made some money on the long side years ago, and now I'm gone. And I live to fight another day. So it's a 1.5% hit to the portfolio. I don't like it, but I sure as hell don't like losing more than that. So that's where I am.
Yeah, no, the discipline of selling, even though it's maybe it reverts, maybe it doesn't, is difficult to do at the time, but it saves you money at least in the long run.
Well, especially here where I can't say, well, in times gone past, it's traded at 3 to 8 times EV to EBITDA, and here we are at 3-4. I don't have anything like that here, so I'm not even going to kid myself that I do. I'm just going to take my lumps and move on. And I encourage people to have a sell discipline. You don't need mine. But I don't sit in hand wring while things cascade down. Now it's probably 30-40% versus where I put the short trade on. So go with God, Bitcoiners, maximalist, and I'll see you later. But I'm not going to. My pain is manageable.
Yeah, it's interesting over the last couple of weeks with the market kind of down a little bit. That it's so strong, right? Because so far in the last year or two, we've seen a pretty strong correlation between the market and Bitcoin. In fact, Ben and I have talked about I think all of us have talked about it a number of times, that it's supposed to be this hedge. It's supposed to act like the new gold, and it really wasn't doing that. And now, in the last 2 weeks, it seems to have been doing that.
And it's very vexing, but it's going to be vexing for somebody else. I'm not going to die on this hill. It isn't worth it to me. Life's too short, and I've got other things to do, so I'm doing it.
All right. So what else are you doing?
Well, okay. And now here's
that for a segue.
Here's that was the ugly. Here's the bad, and then I go with the potentially good. Okay, I'm going to do Clint Eastwood in reverse. So I missed last week's show on, I think it was Monday. I was in the ER, nothing major, but I had no sleep. And I'm, at 4:30 in the morning, I write down this. Okay, this is honest to God. All right, that's iDNA, iShares Genomics, Immunology, and Healthcare. Twist, TWST, is the number 1 stock. Revmata is the number 2 stock. So this is a mom and apple pie. This is biotech. So David, you can appreciate this. Oh, and what's number 3? Moderna. And so I said, nah, it's extended, and Moderna looks like garbage. And then the whole Moderna went up. I'll give you Moderna's chart just to really rub salt in my wounds. That's Moderna. And now you can see, but in retrospect, yeah, there was some volume picking up, and maybe the shorts are going away. But this is 173% move in a day with their melanoma vaccine. And obviously, very few people saw this coming. It meant that the iDNA went up 13% in a day, which would have made them way more than the ameliorated the Bitcoin headache. And I try not to do things when I'm sleepless, and not in the. I literally did it from a hospital bed, and so this is the way the world works. You miss things, and I miss things, and I'm not chasing this here. It's way above the buy point, in my opinion. Moderna's way above the buy point, but I can't tell you how many stocks in healthcare, David, look like this. Pharmaceutical, PPH. IBB and biotech, where Moderna was, let's say a 1.5% position, and now it's a 3 because of what's happened with the stock. And I own some healthcare, not nearly enough, but it's Amgen, which was left for dead not too long ago. Look at this thing, and it goes on and on and on. So the bull market rotates. and some of the AI money is probably finding its way here. But I guess the only reason I say that is to keep myself honest and say I missed iDNA. I'm not going to be involved there. I doubt, because I think the Moderna news is tough to replicate. But again, another. This isn't even a misstep. This is just a missed opportunity, and I go on to fight some other battles.
Yeah, and if you look at like the last month for Moderna mRNA, you see it's just kind of hung out there at $50, $60. It's not as though this news was highly anticipated.
Nope.
And it's actually been a flat line for the last. Pull up the 6-month chart or the year.
It's COVID. Here's the weekly,
and it's just a flat line,
right?
More or less. And then what you have here is a real breakthrough. I mean, it's a real. So you go in, you happen to have cancer. They take a sample of your tumor, and they say, okay, let's come up with a vaccine that's personalized to your DNA and this tumor, and then we'll give you that. So it's not like you're gonna have a whole bunch of products sitting around that you manufacture ahead of time, so this is truly personalized medicine, and so it's really rocket science. Now, was it the appropriate response for the stock? Was it not? I mean, that's a tougher argument given it went up like $25 billion, and you see down 9-10% today. And you say, well, okay, it's just giving back some.
Yeah, but that's that you need perspective for that. I mean, look at this. I mean, I'll down 10 and after 173 up, I'll take it.
Yeah, exactly. And that's what I think you're seeing is people go, you know what? I love it. This is amazing. I'm not going to take away that this is great, but why don't we take some money off the table? Because like you said, what in my portfolio, what might have been a 1% position is now a 3% position, or scale that up to whatever number you want it to be. And you know what, from a risk standpoint, let's still be there, but let's just be smaller. It makes sense.
Yep. All right.
So now what's the beautiful?
I have to end with some levity because this is licking my wounds time. But I wrote in the chat, very tongue in cheek, make America drink again. And this is Diageo, JPMorgan, Guinness, Tanqueray, relatively, frankly, low end brands in most cases. But we've been hearing forever, millennials don't drink, young people don't drink. There's edibles and there's legalized marijuana, what have you, and we stocked up our shelves during COVID, and so you've had this go on for this period of time. I mean, this is 4 years of just getting its head kicked in, and it's changed, and it's following through today. I mean, this is a pretty chart. If you squint, you've got the 200-day going up here. The 50-day is crossing through the 200. Look at this volume recently. We got a new relative strength high today. Now, it's off the bottom. I'm not going to kid anybody, but it's sure as hell off the high, too. And at some point, I'm watching this trend line. It's already taken out the 200-day to the upside. I think it's going to take out that long-term trend line. And when it does, you have some new people. I don't know what's going on other than maybe they just cut costs so much that any revenue surprises to the upside flow to the bottom line. But that's a good-looking chart.
Pull up the 5-year or 2-year or 3-year.
This goes back to the 90s. So this is the monthly.
Okay.
But here's the weekly, which goes back 6 years. 2020, COVID. We're all depressed, drinking ourselves, lazy boys. And then and this is the first time we've seen this. Notice, look at all the times it's tested the 200-day. Can you see my arrow?
Yeah.
It's come up, and then it's just squashed it back down. Now there's a change. And a high volume change that finally takes it out. And this is not, this is definitive, so much so that we've had time to make the 200-day go up. So it's now, if they have an earnings report that stinks more than people think it's going to, yes, you could go back and retest the 200-day to the downside. But my guess is somebody is sniffing out things are better there. I don't even know the valuation. I assume it's cheap after being beaten up for 6 years. But it's a good looking chart, and we've talked. Some folks have talked about it in the past, and I think now is the time to take a look at the long side.
So can you pull up? I know we haven't talked about this one, but it's related. Brown-Forman, I think it's BF.B because they have an A and B share.
Okay, yeah, and that's the liquid one, and the A is the family one.
Yeah, so this looks like a mess, right?
Same kind of thing.
But if you pull up like a 2-year or 3-year, so they had a hostile bid recently that they've turned down, and I've owned the stock on and off, but got out of it when all of a sudden you started seeing millennials not drink anymore. I was wondering if you thought this is kind of the same type of chart.
Yeah, it's not as good in my opinion, but it looks like it wants to follow suit. Who was the suitor in Brown-Forman? I would have thought it'd be Diageo. Who else is there?
I don't remember.
Okay.
I was kind of the reason. So the way I got involved in this stock, I was at a kind of a thing for board members, and the senior executive team from Brown-Forman was there, and I didn't know Brown-Forman from anything. And I'm in the line there was a break. It was dinner time and it's cocktail hour. So in line to get my Diet Coke or whatever I was having. And the guy in front of me says, I'll have a Jack and Coke, actually make it 3 of them. And I made the joke, wow, tough day or something. And he goes, no, my colleagues are here. And so I ended up meeting them, and they were the nicest people. They were there because they wanted to make sure the board knew how to act as a good board. And so it was a Wharton thing. And they were really thoughtful during the Q&A. I really walked away thinking, okay, so I bought the stock and it did really well. And then I got out. But I want to come back to it because I kind of like the management. This guy, Campbell Brown, seems to, it's a very family-oriented company. The founders all own like the voting shares, but it's very distributed in the family. And so the question was it going to sell to a big conglomerate or stay family owned? And so for now, family owned. But
Sazerac, a private company, was the one that came in to make a bid. They make Buffalo Trace, Weller, higher end liquors. But I mean, this is. I think the turn is in. Now you can argue if that's good or bad for society. I don't care, but we're here to make money, and you've got 2 charts now. I didn't even think about Brown-Forman, but the Diageo is ready to go, in my opinion.
Right. Okay. Well, perfect. Well, we talked a little bit about healthcare. I just want to bring up Maine, MANE, just so that folks remember. I did bring up that they had a lot of stock that was coming off the lockup, and we're starting this. I think we're starting to see some of that. But more importantly, if you just look at the clinical results, I don't think they're all that impressive. So individuals, I've said it over and over, I don't think individuals should short stocks. I think it's better for hedge funds and for larger institutions that need to, hedge their performance. I personally think that this one will come down to earth if the product ever gets approved, and there's a fair chance, in my opinion, that it doesn't get approved because, for a lot of reasons. I described it in our chat that you can see a written report about it, of how I'm thinking about it if you subscribe, which you could do at wallstreetbeats.com or at passes.com/wallstreetbeats.
What an elegant segue.
Isn't it?
Yes.
But you're right about the XLV doing really well the last little bit. With all the macro stuff, it's not a surprise people are turning to something where you can print money and set your own prices and have monopolies. So and you're helping people. So in general, you're helping people. You might be sending them to bankruptcy court, but you are generally helping them with.
But look at all these things. I mean, this is IBB, Gap Up, probably Moderna related, PPH, big pharmaceuticals. The Glaxos of the world, the Merck is. I mean, look at these things.
Yeah.
And I said, oh, well, it's too extended, so I'm not going to play, and I missed an opportunity. I want to go back to Maine.
Oh, by the way, you're not alone. Merck has a giant.
Oh, I bet you there's a bunch of portfolio because healthcare is what, 15% of the index,
something thereabouts.
Like that? Yeah, it is an energy.
On top of that, like a company like Merck has a giant patent expiry coming, Keytruda,
which everybody knows about.
Everyone knows, so everyone's afraid to own it. There is like sooner or later but then you get news like this and you see a chart like this and you go, okay, I missed it. So then you have people chasing it. And at some point we're going to get to the thing where you say, well, I understand where biotech's doing and I understand what pharma's doing, but let's step away. I don't think that's yet, but when everyone's zigging, you should zag. Right now, everyone is zigging. So I'm not there yet. I'm still there with my XLV and my XBI and individual names like Merck I own. So
go back to Maine real quick, David. I know we're running a little bit over, but Maine, you said they've got an approval coming up. Do they have anything after that in case the drug is not approved? Is there something there, or does this hit an air pocket and people say we're gonna go to 2 times cash and watch the cash burn?
Yeah, I wouldn't say they have nothing else because companies like this always put stuff else in their pipeline. But this is, I think if you asked most holders, this is 99% of the value. Okay. And so if this has a setback, it's not a good look. And it's not an approval that's coming anytime soon. They're still in phase 3. In fact, I'm not entirely sure they have to do how many more phase 3s they're going to have to do. The FDA, when it comes to cosmetic things that could have any sort of severe side effects, will make you test this for years.
Yeah,
they're just like there's no gold star for coming out with a new cancer drug.
Yeah,
absolutely. Orphan indication for little kids who have muscular dystrophy. Great, you get gold stars for that, FDA. You get lots of press. And you help desperately, people who desperately need the help. Hair loss, and take it from somebody who's vested in getting new drugs for hair loss. I don't think that the world cares. So, but with that, let's call it a day. It's the 24th of August. It's a Monday, so we have a whole week of trading and investing ahead of us. For Robert Morrison, Kevin Bakes Baker, I'm David Maris. We're Wall Street Beats. Talk to you soon.
Bye now.
Thanks, guys.
Thanks, Jan.
Oh, yeah, I forgot about I guess it just popped up.
Here we go.
Remember, you get 25% off of Einstein bars, which I had one yesterday. They're a great snack. Does it help you think better? I think it does, but it could be a placebo effect for me because I need the help. So I can actually feel the difference. But to me, it's just like a great protein bar that doesn't weigh you down. So I actually eat them and I pay for them. So I'm not saying that because I get them for free. But if you want to send them to me, Einstein bars, please do.
All right, guys.